before there comes a market crash, before it becomes a buyer's market, you have to go through these other steps. You don't just go from this extreme step to this extreme step. There's a whole bunch of steps in between, and they don't just happen. Good morning, everybody. Afternoon, maybe wherever you're from or rewatching it. Another episode with my friend David Childers from Keeping Current Matters, where we talk about what's going on economically in the real estate world and traditional historical things, what happened last month, so you can take this information and look like the most knowledgeable real estate agent in your area, and then you can start to do awesome videos like Mr. Childers. David, what's happening? How are you?
It's Friday, Good Friday before the Easter weekend. Excited about that. And, a lot happening in real estate. Johnny, I think about this sometimes. We're in a place where there's some, good news, bad news, the news, as we always say it. Good agents know how to deliver good news. Great agents know how to deliver bad news sometimes. I think there are two things that are on my mind today. I see Sherry's message there. Happy Friday. Two things right now, Johnny. When are we going to see some more inventory out there in the market? Many people wondering that. We'll talk about that today. And two, probably the biggest issue is affordability and rising interest rates, rising prices. A lot of questions about that being prompted. And certainly with rising inflation, affordability in the world, just prices going up. So I want to talk about that a little bit so that folks are educated on what's happening.
Yeah, my friend Saul Klein, we're going to talk about a lot of stuff, and we'll look at today and be like, oh, wow, that doesn't make sense. But the market's still going to move because people still need places to live. But my friend Saul Klein has the best saying: the best time to buy a house was 10 years ago, right? So, we're going to look at some factors. These are real factors. They're impacting people. And they're impacting you in the market and where we're going to head and everything like that. So pay attention to some of this stuff, because I know a lot of real estate agents are transactional. They're worried about the transaction versus being conscious and open about long-term or anything else like that. And there's no right or wrong way. But pay attention to this stuff because it can impact you. And when you're at the cookout, because it's almost cookout season, and when you're at the cookout and people ask you a question, you can answer with knowledge and be able to say, the market's doing boom, across the nation, it's doing boom. Historically, it's doing boom. And now all of a sudden you look like the most educated real estate agent in your area. What do you think about that, David? You think that's good advice?
I think you're right. I think the one thing I think about a lot of times is, and I say this in webinars that we may do as Keeping Current Matters, is I've mentioned it with you before, Johnny, is developing your relevant market opinion, right? You don't have to agree with everything that I put out here, or maybe even that I say, but you do have to have a relevant market opinion in today's market. You have to base that upon fact, right? You can say, hey, here's facts, here's what's happened historically, and here's why I believe what I believe. I think there are a lot of people today that have opinions about our business that just aren't based upon fact. And you probably couldn't have set this up any better. But let me share my first slide before I get into kind of that overlook of inventory. And it's this right here. If you can see that, Allie Wolf, who we follow here at Keeping Current Matters, she tweeted this: just got a message from a home builder asking about our latest forecast, sharing, I have an investor who reads the headline and is panicking. Rick Sharga said, lesson number one, never believe the headlines. And so, Johnny, you talk about being out at, a gathering with your family, being out somewhere with people. What people are reading today are the headlines and nothing more. The headlines are designed to get your attention. They're designed to get you to click on an article. They're designed to drive, traffic to that article, and they oftentimes don't represent the truth. They represent what they believe will cause you to panic or to want to sort of stir yourself up. So I think there are a lot of headlines out there about rising prices, about coming market crash, about recession, about all the things that are happening that you have to dig deeper to say what's really happening.
BlackRock and Vanguard are buying up all the properties. That's why there's none available. Yeah, I mean, all the headlines are just designed for one thing: for you to click.
Yeah, yeah.
They get paid for click-throughs.
Yeah, so let's break this down. Let's take a look at inventory. We try to take a topic each week, Johnny, and look at it, go a little bit deeper on it. I want to give you a sort of a deep dive into inventory, all the the rise in prices, dramatic rise in prices that we've seen is due to lack of inventory. And I'll give you a couple of maps here. Start out here. This is a change in inventory year over year in February. And in just a minute, I'm going to show you March. So this takes a look at February, excuse me, this year as compared to February last year. We're down almost 25% in inventory. And listen, I'm not telling folks on the call today something they don't already know, but this is kind of the look at inventory year over year, down about 25%. Let's go to March. I mentioned we were going to go to March. What do you see? Colors starting to shift there, not down as much in March, down about 19% in March, still down, but seeing that inventory level rise just a little bit. Here's what's important. Let's look at this month over month, because it's even a more dramatic look at it. Here again is the change of inventory month over month. Now this is February as compared to January this year. Now February this year, we were down 8.1% in inventory. We go switch that to March, we're only down 1.6%. So not losing as much of that inventory as what we had. That's a sign pointing to more inventory coming back in the market. And I'm going to show you that in just a minute. But all of this depletion of homes across the country over the last 2 years has led to this spike in prices. And this is a look from CoreLogic going all the way back to January of last year. We followed this, Johnny, over the last several months. And as of February, the latest number we have, year over year price increases at 20%. Okay, so certainly as rates rise, they're going to moderate price appreciation. Expect that to be in the coming months. But as we transition over into the new year here, January, February, even starting back in November, seeing prices rise. And I do expect with interest rates, being right at 5%, over 5%, depending on the indicator you're looking at, to moderate prices in the market right now. But the depletion of homes across the country has caused prices to rise so quickly. That's an important fact to keep in mind as you talk to people that you're running into. But let's go back to this question. Are we seeing new listings come to market? When will we see those listings? Well, for the third month in a row, we've seen listings increase. And that's a good sign, new listings coming back to market. We want to see people sell. We know that there are many people that put off selling. There are many people that are saying now is the time. We want to go ahead and sell. If you have questions about this, drop those into the chat. I'll answer those. We've got a group of people here live on Facebook, I know as well, and people watch this after the fact, but starting to see listings come back. Now, here's an interesting look at listings. We're seeing more listings come to market than we saw this time last year. This is a look at January, February, and March at new listings coming to market. We can see we're well ahead of where we were this time last year. That is a good sign, okay? Back during the pandemic, again, back originally 2 years ago, people pulled homes off the market. We saw things started to sort of seize up when everything was shut down, and we saw listings come back. But very, very much depleted over the last 2 years. And I'm going to break down here in just a minute what that's looked like historically. But I think we are seeing some good news of new listings coming back to market, where we want to get that inventory, Johnny, back to a place that certainly doesn't have a frenzy in the market, because of the lack of available listings.
Yeah, absolutely. And if anybody's watching this on the Facebook group or in the Zoom, put into the comments, what are you seeing in your market? Are you seeing an increase in inventory? You still seeing 40, 50 offers? Are you seeing values not come in? We want to hear from you. Let us know what you're seeing in your market.
Yeah. No, absolutely right. So drop that in there where you're at, what you're seeing with listings. I think we're still seeing a lot of offers in most markets. People are saying, hey, we need more inventory, but we'd love to see that. So let's look at new monthly listing counts here. And Johnny, this is a look that we've used several times This is going all the way back to 2017. I'm going to call 17, 18, and 19 the normal years in real estate before we got into the pandemic in 2020 and 2021 being certainly abnormal years. Here's the interesting thing. This blue bar is this year, 2022, and that sort of red circle is where we're at right now in new monthly listings. Typically we'll see that peak around May, but we continue this trajectory. We'll be back to the number of listings that were coming to market back before the pandemic. Again, which I'm going to argue is a good thing. We need to see more of that come back to market, but we're well ahead of where we were this time last year in 2021 in that green bar, and just sort of eclipsed where we were in 2020 before things kind of fell off the map in the pandemic. And so that is a good thing. We want to see more listings come back to market. Active listings, we look at that, a listing during the month rose for the first time in 6 months. And I'm just a little bit in those active listing numbers, but well below where we were this time last year. So there are two components in the market. There are new listings that come every month, and there are active listings that sort of carry over from the previous month. We're still well below where we were this time last year, and I'm going to give you the same look here in just a minute as compared historically to what we've seen. Here's the same look here as compared historically in active monthly listings, again, 2017, 2018, 2019, as normal years. 2020, we saw inventory depleted during the pandemic, kind of right here, if you can see that, going down. And then 2021, we never recovered. And this is where we're at right now with active listings. So what does all this mean? I think there are a couple of things that I would draw out about this. We're starting to see more listings come to market, yet active listings are remaining very, very low. What does that mean? A lot of activity in the market. I'm going to show you one more graph here that I think does one of the best jobs of communicating where we're at. But no doubt we need new listings, but we also need to replenish the active supply, months of inventory, so to speak, across the country. But this is a direct look at, they're coming back to market, but they're getting purchased as quickly as they come to market, just that speed in the market. And I'm not, again, telling anybody something they don't know already, but hopefully this gives you perspective to be the knowledge broker for those that you're talking to, and have that market opinion that, hey, we're seeing homes come to market, but they're selling really, really quick. Getting buyers prepared for that, and I think anybody in the market is certainly used to that. Probably the best graphic, and I'll wrap up on this, Johnny, before I pause for a second. This is a look at new listings that come to market each month compared to active listings. Active being in blue there, new listings being in green, sort of a different look. March, the first month, we saw new listings eclipse the active listings, just speaking to the fact that as soon as something comes to market, it sells. We don't see a lot carried over from the previous month in listings across the country. So again, going back to the trajectory, if I go back to this slide, hoping that we'll see that eclipse and get to the point where we were back in 17, 18, and 19. As we see more listings come to market and see, more folks say, hey, we want to go ahead and put our home on the market and get it out there.
Yeah, that's good stuff. Definitely that we're seeing the improvement in one respect, but they are flying off the shelf. We got some great comments to that effect too. One on Facebook where Tom says the Raleigh, Durham, Chapel Hill, North Carolina market is still very hot. I think it will be hot. I think that market will be hot for eternity. Yeah. Low inventory and offer prices well over asking with high due diligence periods. We're seeing in the comments and the Zoom too, we were seeing some great things in there. Definitely seeing more listings daily, more price reductions, more back to market. So that's a good thing. And then somebody else had posted that they're flying off the shelf as quick as they're coming in. Right. Yeah. So hi, I'm from San Antonio here, and I clearly see an increase on back on the market under 800,000. They fly off the shelves there quickly. So I think, we have to take into consideration that what we've witnessed for the past couple of years has been an extreme seller's advantage.
Sure.
Right? There's nobody denying that. So if anything, before there comes a market crash, before it becomes a buyer's market, you have to go through these other steps. You don't just go from this extreme step to this extreme step. There's a whole bunch of steps in between, and they don't just happen, right? Even the crash of, depend on where you want to look, the crash of 07, 08, it started in 06 here. Properties, were going up, and then they got flat. And then they stayed on the market. Then they weren't selling, right? And then the next year they started to come down, and then all of a sudden the bottom fell out. And that's when the crash happened. So I don't anticipate that we're going to go for any of those headlines. Are we going to have corrections? Sure, we're going to have corrections back to a normal market.
Yeah.
Right. So don't get all worked up by the headlines. Don't ever get worked up. It's clickbait. Do your research. Look at your research. And these things are great. And somebody asked, can I get the pitch deck on this? I'm going to say email David at keepingcurrentmatters.com. He'll send it right over to you.
Yeah, it's just David at keepingcurrentmatters.com. You can email me. I'll send you a link for these slides if you want to use these. As you're talking to people, you're making a video, even with your team, if you're going to go over this, with a team. I think a couple of things about that, Johnny. What do we do with this information? My advice is going to be get out there, and Johnny, you do such a good job with it. Make a video with it, put it as your background, talk through it. People want to see this information. A lot of people are sort of attuned to the real estate market right now. They're seeing things sell, they're seeing activity, and they want to know what's happening. A couple things I think we can expect relative to inventory. I think you're going to see inventory continue to come back to market as people realize I can sell my house for this. They can take advantage of this market. Certainly people are I hope we continue on this path, feeling safer, bringing people into their homes, coming out of the pandemic. Let's again, hope we stay on that path and all that. And I think as you see interest rates rise, you will see a moderation in the market. Here's the reason why, and I'm going to get into this in just a second. What someone could afford last year has changed into this year. We were right at 3% at the beginning of the year. Some saying 5.25% right now, depending on where you look. That's a big jump in affordability in homes. So we've seen prices, escalate quickly, and now you're seeing interest rates rise. I'm not saying I don't believe it's going to turn the switch off in the market. Homes are not going to lose value. We've covered this extensively, Johnny. We did it 2 weeks ago. If you haven't watched that, you can go to YouTube or go back on Facebook and find that video where we talk about what's happened in previous markets where we've seen interest rates rise. But I do think it will cause people to go, can we afford that? Do we want to buy at this point? And what's the carrying cost on that? In the exact same direction that we saw back during the pandemic. I even think psychologically, Johnny, when you see an interest rate at 2.75%, people that were thinking about buying sort of have that mentality of like, we're doing it now. That's what we saw 2 years ago. And now people are going to go, okay, let's see if this is right for us.
Right. Absolutely. What we're seeing is a little cool off, but in some areas, not all areas, in some areas, we'll see that little cool off. And I want to hear from y'all in the comments again. Are you seeing anybody that are having their pre-approvals or pre-qual letters rescinded or adjusted because of the current rates? And does that take them out of the market of what they're looking at? Because let's face it, if you're pre-approved for 800,000 and in your market 800,000 gets you what you need, a 4-bedroom, 2.5 bath, 3-bath colonial, right, 2-car garage, whatever it is. Now all of a sudden you can't afford that 800,000, so it bumps you down to a 3-bedroom Cape, which is still a perfectly fine house in my opinion, but it might not suit your needs. And now all of a sudden you're going from the starstruck, oh, I'm going to get this, even though at 800,000 you probably have to pay 850 to have that cash. Are you seeing that? Are you seeing people's expectations adjusted because of their pre-approval conditions? So put that in the chat, put that in over there. In Lindsay, Sacramento, California, absolutely.
Yeah.
So that's good. Yes, many of my buyers have at least 25,000 in purchasing power
Well, listen,
under
Johnny, the
agreements.
last thing any of us want to do is look at something more expensive than have to look at something less expensive. I don't care what it is, right? You start to look at something that's a little
Pay
bit
the same
nicer.
price for something less.
Totally. Yeah.
Right.
Yeah.
So this is where I
just-
think us as agents need to really educate. We can say this till we're blue in the face. And I'm going to say something, guys. Go to TikTok. Go to Keeping Current Matters. David has been putting out great videos. If you look at videos under TikTok, you can see what other people are doing using the hashtag Keeping Current Matters. So be inspired by what your peers are doing out there because they're doing it. And if you're not, you should be. Right.
Yeah.
Because we got to get that message out there. But now take that example that I just said. Hey, 5 months ago, you could have bought this house for $1,800 a month. And now you can get this house for $1,800 a month, which is less of a house. How long are you going to wait? You're going to wait until you get the condo? Right.
Yeah. I think, Johnny, what strikes me in this is this takes people off the fence and they go both ways. Some people are like, we're out, we're not going to do it. We can't afford what we want. And so we're just not going to do something. And other people jump in and say, we're going to do something now before they go any higher. But let's talk about that. Because I want to give you a little bit of a breakdown on affordability in something we've talked about, gosh, for the last couple of years, Johnny, of looking at homes and are they affordable? And we've addressed this question, but let me give you a little perspective on this. I'll sort of start again like I did last time with a tweet here from Hallie Wolf. Great tweets if you're not following her. Talk to a loan officer about rates. Mortgage rates are definitely impacting buyers right now with little reprieve in sight. I have to get creative on the financing side to make things work. She says probably fine, but some PTSD hearing creative and financing in the same sentence. Certainly all the issues back in 2008 were caused by creative financing and challenges with mortgages, a lot of those which aren't in the market today, and that is a good thing. But the price is going up. I do believe you will see more clients opt maybe for adjustable rate mortgage if that's right for them. There's always talk of extending the mortgage rate beyond 30 years. We're going to see something like that. I don't have any information on that. But I think no doubt, we're seeing the effects of rising prices everywhere, and consumers are going to react to that. Now, I'll use this Harris Poll quote that found that 84% of Americans plan to cut back spending as a result of price spikes, and real estate is no different. It's also changing consumer behavior in some unexpected ways. More than 7 in 10 report feeling the effects of inflation, the most in gas prices and groceries. We certainly know that's true. That is happening in housing as well. We've felt that for the last couple of years, but we've sort of been able to stay ahead of that curve or stay ahead of that wave, whatever you want to call it, with these low interest rates. Now we're starting to feel it. Let me give you just a little bit of perspective on that. This again, if you want to email me and get the slides, david@keepingcurrentmatters.com, I'll send them to you. But here's a look at the change in mortgage rates if you were to finance $360,000. Now, I know some of you and prices that you dropped even in the comments here are a multiple of this. But if we take January of last year and where we were at in an average interest rate on $360,000 finance, just under $1,500, $1,465 on principal and interest payment. We fast forward to where that could go in October, 5.5%. We're not too far away from that right now, just a little over $2,000. That's a difference of about $580 in a principal and interest payment.
Wow.
That's significant impact. And again, if you're in a market that's larger than that, it's a multiple of that. You double that, you're over $1,000. You triple it, you can go on down the line for that. Serious impact to the affordability of homes across the country. Now, I always remind people, housing affordability is different than affordable housing. We need more homes on the lower end of any market. This is what the dollar will buy. And certainly homes are less affordable today than what they've been in the last couple of years. If you want to look at this historically, because people go, gosh, is it even affordable to buy a home anymore? What we use is the Housing Affordability Index to measure this. And this is the most recent affordability index, comes out from NAR. And if you want to go back and look at this, I'll remind something, everybody on the call, every KCM slide we use, if you go to the notes of the slide, we link to the source report. If you go, I want to really understand this and dig deeper into it. But the way you read housing affordability in NAR's index is the higher the number, the more affordable homes were. And so we've, sort of come out of the last 14 years almost of very, very affordable housing. Certainly the most affordable the years when distressed properties dominated the market post housing crisis. But look, let's be honest, for the last 5-6 years, we've seen very, very affordable homes in this country, even last year and the year before, rivaling during the times when we saw, so many properties on the market during the downturn. Well, where do we stack up today? Well, the good news is homes are still very affordable as compared to history. This goes all the way back to 1990. And you see the 1 year here, I'll kind of draw it out with my cursor here, 2008, homes aren't as affordable as they were in 2008, but the years prior to that are actually more affordable. So it's all about perspective, but no doubt affordability is being put into question, and homes are less affordable as rates rise. I'll give you a little bit of a perspective on this too. I think homes and affordability are reaching limits right now. This is a look at normal lending standards. You think about 28% of your income committed to a mortgage payment. This is a median priced home. You put 20% down. The average, 96 to 2006, you see in the blue bar, there was about 25%. During the housing crisis, shot up there. And in the first quarter of 2021, about 22%. We sit at 29% over kind of the normal lending standard right now. So no doubt affordability is being questioned in homes all across the country. A couple of perspectives on this. I want to give this to you, and I'm going to wrap up. Bill McBride said this: based on the current estimate for the peak Fed funds rate, the 30-year fixed mortgage will likely peak somewhere between 5 and 5.7%. There's some variability in the relationship, so we might see rates as high as the 6% range. Say 5 to 6%. We're already at 5%. We're going to see that rise, probably not at the rate that what we've seen in the first 90 days of this year, but this gives you some perspective. On what we'll see with rates. I want to end with this, Johnny, because I think it's something. I was on the road last week at a conference and people were asking a lot of different questions. And here's the bottom line. I want to sort of shock you with this. Here's the bottom line. Nobody really knows what's going to happen over the next year.
No, nobody does. That was actually my message yesterday on my daily video.
Yeah.
You don't control any of it.
Nobody really knows what's going to happen. And I want to say one thing about this. What do you do when nobody knows? I think there are a lot of people that get paralyzed in that moment. And I want to give you a little bit of coaching, maybe you didn't ask for, but give it to you. There's a difference between perfect advice and expert advice. Nobody's able to give you perfect advice right now. What I'm trying to give you, what Johnny's trying to give you in this time, is expert advice. This is what experts are saying. If that changes next month, guess what? I'm going to show up here with you, Johnny, and I'm going to say, this is what experts are saying now. And that's how we're going to give you that. Now, I would argue this. If you're the agent that's putting out expert opinion and expert advice, you're able to give that to people. But don't get hung up right now on being perfect, because we are in a fast moving market that even the experts are saying nobody really knows.
Yeah, perfection is a
not
myth.
going to end tomorrow, but we don't know.
Perfection is a myth, first and foremost. But understand one thing: when this market does turn, and it always does,
sure.
Okay, and I don't know if it will be a week or 5 years from now. But when the market turns, and it always does, there's going to be a bunch of agents that are standing there like the seagulls from Nemo, mine, just sitting on the rock waiting for something. That is our industry. Sorry, guys. That is 80% of our industry. They don't know how to market themselves, brand themselves, go out and get it. That's why the failure rate's at 87%, right? So the 13%, what do they do different? They brand. And Video is free. Social media is free. You can do these things. I mean, ads cost money, but you can do social media on your own personal profiles. Heck, TikTok, you can build an audience for free, but position yourself as somebody that knows what the hell they're talking about, and not that you sold a house in 6 seconds with 80 offers over asking price. Nobody gives a crap. Nobody cares. But what they do care about, the consumer cares about, is that you know what you're talking about. I live in an affluent town. Most of the people, a large portion of the people here work for Fidelity, the next town over. Educated people. They want to know that they're talking to somebody that knows what the hell they're talking about.
Yeah.
All right. So if you go in there and you're just trying to be a salesperson, you might not get the sale. But if you go in there as a knowledgeable person, you're going to connect and get with that person. And if you're putting that content on social media, then there's going to be a better chance that they see you. They build that parasocial relationship with you. They get to know, like, and trust you, and they can say, wow, this guy or gal knows what they're talking about, right? They're talking about markets and charts and things like that, because a lot of these people will see the same news, right? Oh, the market's doing this, market's doing that, because they're engrossed in different markets. And the real estate market is an economy driver.
Totally. Yep.
Right. It's an economy driver. So people in the finance world are paying attention to it. So be the person that knows what you're talking about. If you sit down with somebody that, understands finance and economics, and you try to bullshit your way through the conversation, they're going to know. They're just going to know. But if you can take 1 hour a week, David, 1 hour a week, and study the Keeping Current Matters material and put it out there as a video, which literally takes 10 minutes to do, 40 minutes of study and 20 minutes for video, you're going to sound more knowledgeable. You're going to be able to have spontaneous conversations with people, and you're going to position yourself differently, and you will stand out. And that's how the winners win during a turned market.
Yep. Absolutely. Absolutely. Don't get paralyzed by perfection. I think you said it really, really well. Put the information out there, be the expert. In times of uncertainty, people follow the certain and those that are experts. And I think we're in a time right now where a lot of people are saying, what is going to happen? What is that going to look like? So,
yeah. So what do we got? We got anything else?
That's it. That's what I've got. We can wrap on that this Friday. I always enjoy this time. Everybody that joins, if you want the slides, email me. I want to get those to you. It's david@keepingcurrentmatters.com. Grateful for everybody that joins Johnny on these Fridays.
And listen, I'm telling you, go to TikTok. I know you all have it. You're all voyeurs. Maybe you haven't made a video yet, and that's cool. Go there and learn. When I'm on TikTok, I call it research. So don't feel bad about it, right? 4 days might go by when I start to the time I come back. I don't know how that happens, but go take and do a search for Keeping Current Matters. See what David's doing. See what some of your peers are doing around the country, and they're doing different, because there's a lot of great creative things. And, you can only do so many. Nobody's invented this stuff, right? So we all are inspired by one another. So go be inspired by these people. Get uncomfortable doing the video. Come out of your comfort zone a little bit and do it consistently. Do 2 a week, right? 3 a week, and you're gonna have even 1 a week. You're gonna start to get some excellent results from that, and position yourself, because what's gonna happen is the people that are seeing it, you don't even know, and then one day you're gonna have the conversation, and they're gonna say, "I see you everywhere.
Yep,
I like your content," and
great
that's
point.
why we do it. Anyways, David, thanks for being here. People can get can't even talk anymore. It must have been the iced coffee. People can try Keeping Current Matters for 14 days for free, right? It's 14 days.
That's right. Yep. You can go to trykcm.com, go grab these slides, go get all that. And again, Johnny, you mentioned it. I just want to say this. Go follow Keeping Current Matters on social, on TikTok, see the stuff we're putting out there, and use that. Get it out there.
Absolutely. Hey, man, if you can't create it, copy it. That's what I say. Everybody, thank you. LabCoatAgents, thank you. Peace out, everybody. Have a good weekend.
Take care.